Greetings, folks. Warren Buffett here, and today we're diving into the world of investing, my favorite subject. I've been doing this for decades, and let me tell you, it's not about chasing the next hot stock tip. It's about identifying companies with enduring value, businesses that are built to last. Think of it like building a house. You don't want a foundation of straw, you want solid concrete. That's what we look for in companies: strong fundamentals, a history of profitability, and a management team that understands the value of long-term growth. We're going to take a look at some of the companies in my portfolio companies that I believe are built on that solid foundation. We'll explore what makes them tick, why I invested, and what lessons you can take away for your own investment journey. Now, let's talk about Coca-Cola. You know the name, you've probably enjoyed their products, but what makes them a great investment? It's simple, really. Coca-Cola is a brand that's recognized and enjoyed worldwide. That kind of global reach is invaluable. People crave consistency, familiarity, and Coca-Cola delivers that in spades. But it's not just about brand recognition. Coca-Cola has a remarkable distribution network, ensuring their products are available virtually everywhere. They've also been adept at adapting to changing consumer preferences, introducing new products and variations to keep pace with the market. And let's not forget the dividends. Coca-Cola has a long history of paying dividends and consistently increasing them. That's the kind of steady, reliable return that I find very attractive. It's like planting an apple tree. You nurture it, it grows, and year after year, you get to enjoy the fruits of your labor. Investing in Coca-Cola is, in a way, investing in human nature. People want that simple pleasure, that familiar taste. And as long as that holds true, Coca-Cola is well positioned to deliver. It's a classic example of finding value in the enduring, in the companies that have stood the test of time. Remember, investing is a marathon, not a sprint. We're looking for companies that can go the distance, and Coca-Cola, with its global presence, strong brand, and commitment to its shareholders, is undoubtedly one of them. Let's shift gears now and talk about another favorite of mine, American Express. This is a company that understands the value of relationships, of building trust with its customers. They've been doing it for over a century, and that kind of longevity speaks volumes. American Express caters to a certain clientele, one that values service, reliability, and a touch of prestige. They've cultivated that image carefully, and it's paid off handsomely. Their customers are loyal, and they're willing to pay for the convenience and benefits that American Express provides. Again, we see that global reach with American Express, a key factor in their success. They're not confined by borders. They operate on a global scale, tapping into markets around the world. This diversification is crucial, providing stability and growth potential. And yes, you guessed it, dividends play a role here too. American Express has a solid track record of dividend payments and increases. They understand the importance of rewarding their shareholders, of sharing in the company's success. American Express is a testament to the power of a well-managed brand, a company that understands its customers and delivers consistent value. They've weathered economic storms, adapted to changing consumer behavior, and emerged stronger each time. That's the mark of a true industry leader. Now let's talk about a company that needs no introduction: Apple. They've revolutionized the way we communicate, consume information, and interact with the world around us. But their success goes beyond sleek design and user-friendly interfaces. Apple is a master of innovation. They don't just follow trends, they set them. They understand that to stay ahead, you need to constantly evolve, to anticipate the needs of your customers before they even realize it themselves. That's how they've managed to stay ahead of the curve for so long. But innovation without execution is meaningless. Apple excels at both. They control their entire ecosystem from hardware to software, ensuring a seamless user experience. This control, this attention to detail, is what sets them apart. And let's not forget the brand loyalty. Apple customers are some of the most loyal in the world. They're drawn to the quality, the design, and the sense of community that comes with owning an Apple product. That kind of brand loyalty is invaluable in today's competitive market. Apple is a company that understands the importance of both innovation and execution. They're not afraid to take risks, to push the boundaries of what's possible. And that's why I believe they'll continue to be a dominant force in the tech industry for years to come. Now let's delve into a sector that might not be as glamorous as tech, but is equally important: insurance. Specifically, let's talk about Chubb Corporation, a company that embodies the principles of stability and reliability. Insurance is about managing risk, about providing peace of mind. Chubb has been doing that exceptionally well for decades. They have a reputation for financial strength, for being there when their customers need them most. That kind of trust is earned through consistent performance and a commitment to excellence. Chubb operates in a wide range of insurance markets, from personal property and casualty to specialized commercial coverage. This diversification is key, spreading risk and providing a stable stream of revenue. They're not reliant on any single market or product line, which adds to their resilience. And like the other companies we've discussed, Chubb understands the importance of dividends. They have a long history of paying dividends and consistently increasing them, rewarding their shareholders for their trust and patience. Chubb might not be the flashiest company in the world, but they're a solid, dependable performer. They're in the business of managing risk, and they do it exceptionally well. That's the kind of company I want in my portfolio, a company that provides stability and peace of mind. Now let's talk about a slightly different approach to investing index funds, specifically the S&P 500. This is a broad market index that tracks the performance of 500 of the largest publicly traded companies in the United States. Investing in the S&P 500 is like investing in the American economy as a whole. You're getting exposure to a wide range of industries and sectors, from technology and healthcare to finance and consumer goods. This diversification is crucial, reducing risk and providing a smoother ride over the long term. One of the biggest advantages of index funds is their low cost. They're passively managed, meaning they track an index rather than trying to beat the market. This results in lower fees, which can have a significant impact on your returns over time. Another benefit of the S&P 500 is its long-term track record. Over the past several decades, the S&P 500 has delivered impressive returns, outperforming many actively managed funds. This consistent performance is a testament to the power of broad market exposure and the resilience of the American economy. Investing in the S&P 500 is a simple, effective way to participate in the growth of the market without having to pick individual stocks. It's a strategy that's well suited for both novice and experienced investors alike. So there you have it, a glimpse into my investment philosophy and some of the companies that I believe embody the principles of value investing. Remember, investing is not about getting rich quick. It's about building wealth gradually, steadily, and with a focus on the long term. Look for companies with strong fundamentals, a history of profitability, and a management team that understands the value of long-term growth. Don't get caught up in the hype or the latest fads. Focus on the fundamentals and be patient. Investing is a marathon, not a sprint. Pace yourself, stay disciplined, and remember that the greatest rewards often come to those who are willing to wait.